All right, we are live. Welcome everyone today, aka Claudine. We appreciate you coming out here today. We'll see if we get anyone else, but all those tuning in online, we appreciate you guys being here. We know it's a hot one out there, so not everyone wants to brave the heat, so they're staying in their nice, cool places. Well, we're gonna kind of keep it going pretty quick tonight. It might be a quicker meeting because we might not have as many Q&A. However, if you guys are tuning in online, looks like we've already got 10 people with us. Feel free to drop any questions that you guys have into the chat. We've got someone monitoring the chat for you guys regularly so we can get your questions answered. And this is the Investors Performance Group, and it is brought to you by the Kelly Fry team. We are a full-service real estate investment team focused on helping you build your wealth, and we connect you with all the top vendors that you need to know, from lawyers to property managers to accountants, inspectors, everyone, to help you grow your portfolio. All right, tonight's agenda, we're going to keep it nice and quick tonight. We're going to be kicking things off with our first guest speaker, which is going to be Stuart Ross. He's got quite the presentation on what you need to be aware of if you're not going to close on deals, do vendor takebacks. Like, there's a whole plethora of things he's going to warn you about to make sure you're in compliance with your portfolio. Then we're going to go through the market update. We've got a new version of the market update where we're going to really kind of dive deep onto the micro markets today in certain areas to really help you understand what's going on. Then our final guest speaker is Keaton Bessey, who is a property manager in the Lower Mainland, giving you guys what's going on in the rental market, because you're seeing the news. Now you get it boots on the ground. And then finally, we got some hot deals. And when I'm talking about hot deals, we got some really hot deals. We got 4, which is the first time we've had 4, I think, since starting this, because normally we only have 1 or 2 that we can find, but the market is really good right now for investors if you know how to find the deals. So we're going to kick things off right away. Of course, feel free to take video, take photos. If you're watching online, take photos and post them. Tag the Kelly Fry team. Tag me at Cameron E. Manning. We'd love to see what your guys' biggest takeaways are. And without further ado, we're going to go right into our first speaker, which is Stuart Ross. Stuart is a lawyer that specializes in investment real estate development, residential tenancy, wills, estates, and more. He's got over a decade of experience in it, having worked in the area for most of his life, and he offers a unique perspective as an investor himself. So I'm going to hand that over to you. Here is your clicker.
Thank you, Cameron.
And let you take it away. Warn us on what not to do in real estate so we stay out of real estate jail.
Okay. Thank you. I'm sure for some of those online, I've seen you at other IPG events before, so I'm happy to be speaking here again. So I will dive right into it. I think Jury is monitoring the chat online, so you can interrupt me online if you have any questions. I've got a PowerPoint here. If anybody wants a copy of it, you can email me. I'm happy to send it out or take any follow-up questions by email if you don't want to type them in now. Okay, here we go. My name is Stuart Ross, and I am the managing lawyer at the law firm of Garton Harris, which has been in business in Port Coquitlam since 1974. Today, our topics of discussion that I'm going to hit on are, defaults by purchasers, vendor take-back financing, buying and selling tenanted properties, and I will do my best not to step on the toes of Keaton because he's going to be, I didn't know he was speaking, so in any event, the first-time home buyers GST rebate, the foreign buyers ban and tax, and some exemptions in case, I know that's not really new, but just in case anybody hadn't heard of all the exemptions. Okay, so defaults by purchaser. This happens when a purchaser is unable to complete on the purchase of their property, usually for the reason that they're unable to obtain financing. The consequences for a purchaser in default are mostly the same regardless of whether the target property is a pre-sale or an acquisition of new property, really other than the developer's right to claim the deposit that they don't need your consent if it's a pre-sale situation. The recent case of Mandel and Fong, it's a 2024 case from the BC Court of Appeal, provides a fairly good explanation for the potential consequences for purchasers in default. In that case, the buyer made a subject-free offer to purchase this property. It was in Kelowna for $1.115 million. The buyers were unable to obtain financing as the property failed to appraise out, which means that the bank's appraisers didn't think it was worth what the purchase price was. The seller ultimately had to sell the property for $400,000 less than the deal that had collapsed. The seller was able to successfully sue for their losses on the sale price. So this is just a fairly recent, straightforward example of what can happen. If you offer to buy a property you can't complete, the seller sells it for substantially less, you can be on the hook for the shortfall, and that's exactly what happened in this case. What about the deposit if you're defaulting? So there's the seminal case is Tang and Zhang. This is a 2013 case from the BC Court of Appeal, and it reaffirmed the principle that a buyer who breaks the deal loses the deposit. So in this case, the Court of Appeal determined that even though the seller was able to sell their property for the same amount as is in the collapsed deal, so they didn't actually suffer any losses, they were still able to keep that deposit. So if you're a buyer, you put in a big deposit, you can't complete, the seller turns around and sells it for the same amount or maybe even more the next day, you still lose your deposit. What about the deposit if the matter doesn't proceed to court? So in Tang and Jiang, obviously, because it's a court case, that was determined by the courts what happened with the deposit. However, in the standard form contract of purchase and sale, the deposit is held by a quote-unquote stakeholder, normally the buyer's real estate brokerage. So even if the buyer is clearly in default, the deposit can't be released until all the parties agree or the court gets involved. Sellers sometimes try to have their contracts amended to state that the deposit will be paid directly to the seller to avoid having to go to court to claim it in the event of a buyer default. So there is that misconception out there often that if the buyer defaults, you automatically get the deposit released to you. That's not the case. You either have to agree or go to court. Thoughts for some buyers that may find themselves in default. So try to close. Taking a bad short-term mortgage if you have to, it's probably better than just, quote, walking away. Everybody seems to say, I'll just walk away from my deposit. It might not be that simple. I just read to you the Mandel case. If they sell it for a lot less, you could be on the hook for a lot more than just your deposit. So even taking a bad mortgage, at least you'll leave your fate in your own hands. Get an extension. Sellers may ask for an extension fee. You can try to negotiate something reasonable. It's generally not considered unreasonable on the seller's part to ask for an extension fee. They have carrying costs for their mortgages and stuff like that. So, as long as it's reasonable, that can be a negotiation point. Fine, please extend for however long to let us figure out alternative financing, and we'll pay you, whatever is reasonable. As I mentioned before, with the deposit, you could, if you're serious, you could say, I'll tell you what, seller, we will release the deposit to you right now. We'll consent to it. So that way, you don't have to go to court if we can't ultimately complete. It kind of shows you're serious to still complete, because this is kind of a salvage operation at the time you're talking about, you're finding yourself in default. You could try asking for a mutual release in exchange for the deposit. Hey, I can't complete, but I'll sign a mutual release so you can get the deposit right now if you let me walk away. And you're basically leveraging, trying to make it so the seller doesn't have to go to court, because they'd still have to pay their lawyers and all that kind of stuff to go try and collect the deposit. So this way you're, saying, I'll give you the deposit, but you're not allowed to sue me for anything further.
How often is that accepted?
It's a mix. And it probably depends on if the price is up or down. If the seller figures they can turn around and sell it for something comparable, and it's just a buyer side issue where they couldn't get financing because of their circumstances, they'd probably be inclined to sell it. If it's a falling market, they might not be. If they have another purchase, like a back-to-back, and they have to go buy another property that they have to extend on and get bridge financing and things like that, then they might not agree to it and those sorts of things. But, if you find if it's somebody like with an investor with a rental property and they don't really have that kind of stake in it, they can just say, yeah, fine, just release it. I'll move on to a new buyer, because they're not really suffering anything if the market's stable. Often that kind of more depends on developer circumstances and things like that, and also the market, right? But like, as I mentioned with the developers, the way that the deposits work in a pre-sale under REDMA, section 18 sub 4 of REDMA says that they don't need your consent in a pre-sale situation to claim their deposit. They just sign a declaration saying that you're in default and they take your deposit. So it's a little bit different in a pre-sale situation, because they don't need your consent. 4 thoughts for buyers who do not find themselves in default. Have a subject to financing clause. Right now, it seems like you probably can. Some people, if the heat turns up and it's bidding wars, everybody will say, I'll get rejected or whatever. But if you don't know, have a subject to financing clause, because, trying to go in hot or whatever, you could end up in the Mandel situation or whatever. So if you need subject to financing, keep your subject to financing clause. Get mortgage pre-approval before you write the offer. Go to the bank, see how much you qualify for. And ensure that you have enough liquid cash. This is kind of back to the Mandel situation, and to quote unquote bridge the gap if the property doesn't appraise out. For example, the bank might say, yeah, you can get qualified for $1 million mortgage or something like that. And this is before they actually have the contract in hand. But if the property doesn't appraise out, you still need to make up the shortfall, even though you qualified for the mortgage. So you need to have some liquid cash on hand if you're making these offers and it doesn't bridge out, if you're getting a kind of pre-approval thing before you show the bank the contract. Okay, vendor financing. So again, something come up, mortgage situation or the money market's tight. So what can happen? You can do vendor financing, aka vendor take back mortgage loan, aka a VTB. This is where the buyer is able to come up with the complete purchase price and the vendor agrees to loan the buyer the shortfall to allow the deal to complete. The vendor will typically want a mortgage in their favor to be registered on title to the property to secure their VTB loan. If the vendor is going to be agreeing to a VTB loan, the fundamental terms should probably be set out in the contract of purchase and sale. How much will the loan be for? When is it repayable? What's the interest rate? Either by reference to a specific percentage or to a bank rate, plus or minus a specific percentage. The payment terms, for example, is there going to be monthly payments, blended principal and interest? Is there going to be interest-only payments, or is there going to be balloon payments, i.e. you don't pay me anything, but you owe me all the principal and all the interest at X number of years after the deal completes? There are some issues with VTBs that all parties should be aware of before agreeing to this in the contract. So on the buyer end, and I guess it implicates the seller as well, but if the buyer is already intending and taking out a mortgage for their purchase, so it's not like a cash purchase, they're already planning, the bank will likely not allow a second mortgage, as in a vendor take-back mortgage. The bank will probably not allow a second vendor take-back mortgage to be registered on the title at the time of completion. So when the buyer goes into the lawyer's office, they can't sign them up for the VTB because of the conditions of the first bank saying, well, no, you're agreeing with the bank. You're not registering any secondary financing. So the buyer not be able to complete, which obviously implicates the seller as well. And the vendor should be aware of the process involved if the buyer ultimately defaults on the VTB loan. In all likelihood, the vendor would need to commence foreclosure proceedings, and foreclosure proceedings would typically take at least 6 months. So again, it's back to the kind of idea that you need to have some liquid cash if that's the case. If they're not paying you towards your VTB loan, you need to be able to weather the storm and pay your lawyer for foreclosure proceedings and know that you might not get your contract of sale for about 6 months. Kelly.
What would be typically the foreclosure costs for a seller that's pursuing it in court?
So a lender seller kind of thing?
Yeah.
Can you just repeat the question?
Okay, so the question there was, what would the costs typically be for the lender to do that? It would be mostly legal fees. Presuming it kind of punts along, it's maybe going to cost you 10 grand in legal fees or something like that. And that's if nobody's filing responses and objecting to your foreclosure and all that kind of stuff, and you don't need to go back and get separate orders to evict the tenants and all that kind of stuff. So if it's no, but if the tenant is refusing to get out of the property to allow showings or things like that, you might need further court orders once you get conduct of sale.
But if let's just say, if I have a situation like this right now where I was thinking the owner owns the property, clear title, it's about $630,000. The buyer could probably come up with 400. So then the seller would be carrying 230,000 first
right.
mortgage.
Right.
So I'm just trying to assess. It's not a tenant. It's a person buying it.
That's right. Yes. But if you're say foreclosing on an investment property or something like that, the borrower and the tenant might not be the same person.
Right.
So the tenant might dig themselves in and refuse to allow showings and stuff. You might need to go to court to get court orders to allow it and that kind of stuff.
So it's about a 6-month process, you think?
It's about from pillar to post. So you're going to have your first month, they default. Then you're going to send out your notices. Hey, you're in default. You have to bring your mortgage into good standing. You don't hear anything. Then you have to file your court claim, right? So you're about a month in already. And then you have to serve your court claim. And then they have 21 days to respond to your court claim. So now we're at about 2 months. And now you can go in and get what's called your order nisi. And that's what starts the 6-month period. So you'd probably have about 2 months of work after, like before you could get to having the mortgage declared in default. Then they have 6 months to redeem. And then thereafter, you have to go back to court to get order for conduct of sale, right? And then you have to sell the property, and then you have to go back and get an order approving the sale. So from pillar to post, it would take longer than 6 months. That's
So
the 6 months is
sounds
just the
like
redemption
eight,
period.
maybe.
Probably
9,
10.
10.
Often in these situations, it doesn't get to that point. They'll sell the property on their own accord or go and refinance or something like that. And it doesn't actually come to it. But if it goes all the way, then that's probably what would happen.
I have one, if I may.
So I understood that if a bank has to go in, or a lender has to go in and foreclose on an investment property that is tenanted, the tenant just kind of has to go. Is that true?
Not always. The tenant won't just have to go. Usually there's an order that they allow access to the property, and they have to vacate at a certain time. If it's tenanted, they'll usually put it in the order. Tenant has to vacate at a certain time, or tenant has to allow access and all that kind of stuff.
But the court comes over the top of the RTB in that case, of course.
The court comes over the top of the RTB. If there's a foreclosure, the tenant has to get out.
Got it.
And they could also sue the seller too, because it's a breach, right? So they could sue the seller. Okay. And I mentioned I'm going to try and, so maybe I'll just get Keaton to like wave at me if I'm saying something that he's planning on saying. I didn't know he was coming, so I had this buying and selling tenanted properties. Okay. All right. Okay. So selling or purchasing a tenanted property, and I've got some court cases in here too, so it kind of provides an interesting example, has unique potential complications. The tenant may dispute the eviction notice or simply not move out. The tenant may cause damage between the time of viewing the property and the time of possession. The tenant may leave early. Is that a problem for the seller? Well, the seller would then be required to still pay the cash for the tenant's 1 month's free rent if they get their notice, hey, you got to leave, I'm selling the property. I had a seller client at one point that freaked out about this because they were unaware that they still had to pay them, and they were mad at their agent, and they were mad at the lawyers, and they were just generally angry. Anyways, it came to the point where I think I suggested that, to the agent I was working with, look at going forward. You could always, if you want, add a clause in the contract states the buyer is responsible for that if the tenant leaves early. But that would probably be seen as like overkill, seeing as how the buyer doesn't have any contract with the tenant. Yeah, and that too. But anyways, for the landlord should know, like your seller, if they move out early, they can still get their 3 months rent, and you might have that. So you have to give them 4 months notice now, right? So you give them their first month's notice, like, hey, we're doing this in 4 months. They leave after 1 month. You still owe them their free month, and then you're not getting that rent for the 2 other months, right? Until your deal closes potentially.
3 months.
Yeah, 3 months now. Okay, so
If they just, because it happens often that they choose to leave because they get nervous. You're not, if they give you notice.
no, but if you've given the trigger notice, if you've said, here's your notice to get out because the new owners are going to be moving in, if they then move out after, say, a couple weeks, find a new place, the seller would still owe them their month rent, their 3 month rent, and then they're not collecting it because they planned on, collecting it up until they moved out, and then they're not getting that money either. So they feel scorned that they thought they were going to get 3 months of rent. Now they actually owe 1 and aren't going to get 2.
Whereas if the tenants give notice while it's for sale, no offer, they're not entitled to it.
That's right. Yeah. Yeah. So there you are. So trick your tenants. Okay. Problems may arise even before you list, often due to tenancy agreement related issues. If you have clients that are aspiring real estate investors, tell them to have a lawyer or a professional management company, such as Keaton. Draft a professional tenancy agreement. He's going to hit all the important stuff, how often to allow for inspections and things like that. So step 1 for any of the listing agents should always be to obtain a copy of the tenancy agreement. See if it's month to month, things like that. Does it say anything about viewings? So you don't, you know what I mean? So you don't have to fight with your tenant about how often you can go in and show it. Who's going to provide the notice, the tenant with the notice to end tenancy. The contract should clearly say who's going to do that. Ensure that the notice is properly served. If you don't do it by registered mail, if you post it on the door, you have to have a witness and things like that. There are deemed timelines for service. If you put it in the mail, for example, it was 5 days after. So if you're close to the end of the month, for example, sticking it in the mail might not hit your timelines that you need. If you're buying, how do you ensure that a tenant has moved out prior to you moving in, or your tenant moving in, or whatever? Have a clause in the contract allowing for inspection to confirm vacancies X days prior to completion, or have a clause in the contract that states vacant possession is a fundamental term of the contract, and this may allow the buyer to refuse to complete until vacant possession can be confirmed. Okay, so here's our case law for tenanted properties and buying and selling tenanted properties. What if you do inherit potentially an unwanted or unnegotiated tenant? What are the practical realities? So Akula and Nahal, this is a 2017 case, is a good example. In this case, the seller could not deliver vacant possession. The tenant was there when the buyers were going to close, and the buyers refused to complete. The buyer sued the seller, and the court found the seller in breach because they couldn't deliver vacant possession. However, in this case, the court, since there was actually no change in the property value between the contract and the completion date or by the time they got to court, the buyer was only entitled to the return of their deposit. So if you have buyer clients that are going to potentially inherit this unwanted tenant or something like that, they should probably think carefully about what the actual outcome would be. If they're thinking, oh, we're going to, sue the shit out of this seller and they're going to owe us a whole ton of money because they're in breach, that might not be the case. They might just get their deposit back. So if you're planning on moving your whole family in there, consider your options before just saying, well, they're in breach, we're not completing, because you might be limited in your remedies. You might just get your deposit back. Okay, GST for the first-time home buyers. The federal government has recently enacted legislation that would allow first-time home buyers to save up to $50,000 on the GST for a newly built home. To qualify, the buyer must be a Canadian citizen or a permanent resident, 18 years old, and not previously have owned a home that they lived in. This savings is in the form of a rebate. So unlike the first-time home buyer's property transfer tax exemption that everybody's familiar with, if you're a first-time home buyer, you don't pay the property transfer tax. That's claimed at the time of completion. The GST exemption is set up, at least presently, as a rebate. This means that the buyer will have to pay GST at the time of completion and claim it back later. Often on pre-sales, developers will allow buyers to assign the GST rebate to them, so the buyer doesn't have to pay it at the time of completion, kind of like a buyer inducement, but it's not required. So if you have clients that are first-time buyers that are saying, hey, this GST really helps and we can do that, but we can't pay the GST, you would need to have something in the contract that says the developer is going to allow an assignment of the GST rebate and credit them for it at the time of completion. Otherwise, they're going to be stuck paying it at the time of completion. They'll have to come up with that cash, and then they'll have to wait for CRA to cut them a check back, and who knows how long that's gonna take. So it's not something that's automatic. You'd have to put that in there to make, if it was essential for your client to be able to complete on that. Foreign buyer, yeah.
What happens if you do a rent to own as a developer? Put somebody in there.
Mm-hmm.
The developer has to pay the GST.
That's right. It becomes a self-supply.
And then when they transfer over, because it's an option to purchase,
yeah,
at the very end,
then there would be no GST on them, because it would have been an already occupied property.
So they would never get that credit really in a roundabout way.
No, I guess not. They wouldn't get that. They wouldn't get that credit. It wouldn't be but they wouldn't have to, but they wouldn't be paying it, right? Because when they ultimately buy it,
the GST,
the developer, if the developer,
first-time buyer doesn't normally have to pay the GST, right?
No, they do usually have to. This is the new
Well, it's
new
a
program.
I meant based on this.
Yeah, so they wouldn't pay. So if they moved in as a tenant under some sort of a rent to own or something like that, the developer in that case would just end up eating it because that person would effectively be a tenant, right, for the time being. So it would be a self-supply. But it would. I think it would still be considered a self-supply by the landlord if they move into it. If you're an owner and you move into a new property, or you decide to rent it out, because you would be collecting rent, right? Even though it's an option to purchase, you still would be collecting rent. CRA, I assume, would say that constitutes quote self-supply, which means you have to pay the GST as the developer. At least I think. I mean, I'm not. That's my understanding. I'm not an accountant, but that's my understanding of what would happen. CRA would say that's a self-supply. Okay. Foreign buyers ban. Everybody knows about this. Again, this is, like I say, a little bit not kind of old, but in case certain people hadn't heard about the exemptions or things like that, maybe be curious about those. Maybe you hadn't heard it before. Okay. So basically, if you're not a Canadian citizen or a principal resident, or permanent resident, you're not supposed to be buying residential property. It was extended until end of 2027 or start of 2027. Anyways, it's been extended a couple years, so I don't know if it's going to be sticking around. So the common exemptions: the spouse of a Canadian is permitted to go on title even if they are non-Canadian. So there's a spousal exemption. If the contract of purchase and sale was signed prior to January 1st, 2023, so there's still some pre-sale contracts out there that would hit that exemption. Or the other one that I've had quite a few clients that have been interested in is the corporate purchase. So this is where you have a company where 91% of the voting shares, not necessarily the dividend shares, but the voting shares are owned by a Canadian citizen. And then you can have 9% of your voting shares held by your foreign buyer. So in that case, you could have, a foreign buyer investing in the Canadian real estate, as long as they have 9% or less of the voting shares of your company. They can still have dividend shares, but it's about voting shares. So you can still set up companies in that case if you're looking.
If they own more than 50%, but not the voting shares.
They could own. Yeah, they can own whatever of the common the participating shares, the dividend shares, the preferred shares, things like that. It's about the voting shares. The act, the Prohibition Act, speaks to control of the company.
So like a JV situation where the general partner does all the voting and all that, and the LVs are just flow throughs, right? Cool.
Yeah, you could do that. If the companies own it, it's about who controls the company. Canadian citizen that controls the company.
Who stops the foreigners from buying a property in the first place?
Trudeau.
The lawyer? The lawyer?
What the act says basically is that you're not supposed to assist a foreign buyer in purchasing Canadian residential real estate. So as an agent or a lawyer or something like that, if somebody comes in and says, hey, I'm a citizen of, Burkina Faso, and I want to buy this townhouse. No, I'm not a PR. I'm not a citizen. I'd be like, well, I can't sell this to you. And they have the residency of buyer on the contracts now, right? On the contracts purchase and sale. So, I mean, they're the ones buying it. The level of diligence, I don't think, is overly broad. I mean, I don't have to cross-examine somebody on, like, are you a Canadian citizen or a PR? If they've signed off on the contract and they're showing me like a Canadian driver's license, I mean, I think they're the ones that are subject to the act, right? As long as I'm not doing something knowingly contrary to the act, right? That's kind of my obligations.
Yeah.
Um,
Is it actually possible to buy a piece of property without a lawyer, without a realtor? Anybody that swears an oath.
You could go buy a property. There's nothing, if you're purchasing cash, there would be nothing that has to be notarized. So your property transfer tax return doesn't have to be notarized. The rub comes in is you can't close on undertakings in that case. So you'd basically be handing the seller money and hoping that they actually transfer title to you in that case, which is, one of the reasons that, like lawyers are around, so we can close on undertakings and stuff like that. So you could do it, but you'd be taking like a pretty big risk.
Not that I'm planning on it,
No, yeah,
but
yeah.
could you do it by getting title insurance?
Probably, but I mean, remember the seller's going to have a lawyer as well too, right? And they ask for these like declarations of like residency and stuff like that. There'd probably be somebody along the way that would say, well, we can't do this potentially.
I can see it being 100% unlikely,
Yeah.
but I was just curious if it's possible.
Yeah, I don't know. Anything's possible, right? That's the, kind of the difference between fiction and reality is that fiction has to make sense.
You got some property? Let's try it.
Yeah,
No.
yeah, let's try. Okay.
I would never do it.
Okay. The PTT. So this is the other aspect of the foreign buyers. So legally referred to as the additional property transfer tax for foreign entities and taxable trustees. Foreign buyers pay an additional 20% on the fair market value of the property. So consider the PTT in conjunction with the foreign buyers ban, as the rules are different, right? So if one spouse is Canadian, the other spouse is non-Canadian, have the property. This is just an idea, the same way as you do for the first-time home buyers, where one person has it, one person doesn't. You can still set it up as 99-1, so you can still have the Canadian citizen go on for 99%, have the foreigner go on for 1%, and then you're only paying the property transfer tax, the additional property transfer tax on the 1% of the fair market value. So you're minimizing the tax. And that's the presentation. I'm sure everybody enjoyed it. Is there any questions online or in the room or anything like that?
Any other questions anyone has? I don't see any online yet. Anyone online, feel free to drop any questions that you guys have. And if not, then we will carry on.
All right. Okay.
All right. Excellent.
Okay. Thank you, Cameron.
Thanks, Stuart. I'm going to grab that from you there. Perfect. Thank you. We'll give you a handshake there, too. Thank you so much. All right. Okay, I'm just going to get a quick camera here set up, and then we are good to go into the next phase here. So there you are. Thank you. All right, let's keep things rolling. So we're going to go into our market updates of what's actually happening in the market. And I had a few requests from the past market updates that we've been doing to talk a little bit more about some different cities. So we've expanded the cities a little bit that we're doing. We took some out, added some, as well as I've talked a lot over the last several months about how there's no such thing as a Canadian real estate market. It's a speech probably people are getting tired of me hearing about, but I decided to put some real fact into this. And I always talk about how you really need to understand your micro markets, right? When we hear Canadian real estate market from the news, they're basically painting a canvas over a very large country that says that everyone's operating in the same scope. But yet we hear down in Calgary, people are still selling relatively quickly right now, whereas we got properties that are sitting here. But then even going further, different areas of different cities are operating. Then you've got condos versus townhouses. So I decided to actually pull that out today and really show you these dynamics. That you really have to go granular when you're looking at the dynamics of different markets and where those opportunities are. So let's dive in. We're going to do our broad overview first before we kind of dive deep. And let's talk about inventory. As you can see here, through the spring market, we had a very sharp increase. It was going up like crazy. People were just flooding the market. A lot of this is due to several factors, such as Airbnb restrictions. People who had Airbnbs having to shut them down, realizing they can't cash flow, putting them on the market. You had rental properties that suddenly couldn't cash flow anymore because rates went up and they were holding on. Now finally they said we can't hold on anymore. You had sellers who also had to refinance and or their mortgage rates went up, had to sell. So for a lot of different factors, we saw inventory rise. As we kind of got out of the spring market, we have seen there's still quite a bit of inventory on the market, but it did kind of just level off a little bit. The sharp increase didn't continue, which was a nice reprieve to see. And that's kind of almost across the board, except Chilliwack is still up over last year. So when we take a look at what the sales have been, right? So that's our inventory. How have sales been reacting to it? Now, we did see sales increasing through the spring as well, typical of a spring market. However, the pace wasn't keeping up with the inventory that we had. If you think about it, only 2,185 sales out of almost 15,000 listings in Greater Vancouver. That's a wide margin in terms of what's actually selling versus what is on the market. So we did see that Fraser Valley and Chilliwack is still kind of going up, but through June, we did see Greater Vancouver did dip down in the sales a little bit that month. And then what is the relationship between the average price? Now, this was kind of interesting when I was looking at it. We could actually see over the last month a slight increase overall, even though we saw the inventory kind of level out and sales kind of teeter a little bit. The property values still kind of jumped a little bit. Now, this could be across multiple factors because we are looking at a broad spectrum. Maybe more higher priced listings actually sold this month. That's going to drive things up a little bit. We're talking averages here, right? Maybe it's just the type of inventory. We didn't have near as many condos or townhouses sale. Maybe more detached did. So a little bit of a bump. This is something we want to keep an eye on. 1 month of data is not really enough for us to make the judgment that we're out of this slow market, but it's a little bit of an indicator that we should keep an eye on it and maybe start making some moves if we can find the good properties out there. Now, I did add these into the last couple of months here because I wanted to show you guys where things are at market-wise. And as we can see here, most markets, especially the ones we typically operate in, they're operating in the balanced market. Now, Fraser Valley and Greater Vancouver are leaning down towards the bottom of that balanced market. Anything below 12% is considered a buyer's market. And when you have it in the under 12% for an extended period of time, we see that downward pressure on homes. Whereas we saw Chilliwack was taking that dive and they jumped back up last month. So they're sitting at about 17.7%. We consider it a seller's market when it's at 20% or above. And when it's sustained above 20% for an extended period of time, that's when we see upward pressure on homes. So this kind of lets us know whereabouts the market is sitting. So when we're taking action, we're probably teetering closer to that buyer's market, the bottom of the balance, meaning it's time to go buy. And then this slide here is the percent of original price to sale. So this is kind of telling us where things are actually selling compared to their list price. And you can use this as a bit of a guide to see if you're actually getting a good price compared to the market. So as we see here, Greater Vancouver is averaging at about 96.3% of their list price. So that's something to consider. If you get anything below 96%, you might have got a good deal on the market considering the average is buying at higher. Fraser Valley is down as low as 59.7 and Chilliwack as low as 55.5. So there's maybe some better negotiating opportunities out in the valley right now because sellers are letting their properties go for less in that area compared to list. So when I was looking at this with some of my sellers recently, and again, we go dive into the micro markets, we use this as a bit of a guide. And one of my clients bought a condo. Now they're a first-time home buyer, but we still use this as a guide. And we noticed that 2-bedroom condos in Cloverdale were selling at 99.8% of list still. So people were getting still very close to list. We managed to get it for around, I think it was 96%, shaving off a total of 3%, which is all extra money back in their pocket. They made money on the buy or gave that buffer in case any changes in the market happen. All right, so we're going to go into the actual stats for the cities right now. And we're going to start out in Chilliwack. We're going to move kind of towards the west here. And I picked a few cities where we're going to show that micro dynamic. Now, Chilliwack to start. Chilliwack, we can see prices are just up very slightly over last year. However, we have noticed up 24, almost 25% increase in the overall listings. The more listings that hit the market, if we don't have the sales absorbing it, we will start to see some other pressure the other direction on the detached homes. You can see here that it's almost 40 days now to sell a detached home in Chilliwack. When we go across, townhouses are faring a little bit better with an increase of 5.3%. The listings are actually down 6%, so that's some difference in the market there. Townhouses, there's less inventory, so those are probably going to be moving a little faster, and in this case, it's 35 days. And then condos are pretty stable at 1.3% over last year. Only an increase of about 6.4%, but it is taking 47 days to sell a condo. So if you have a condo in Chilliwack you're trying to sell, patience is probably needed, and realize that, unless you price it really sharp, you're not going to get an offer within that first week. It might take a couple weeks. However, the goal anytime you're putting a property on the market is that you do want to beat these averages, right? So that's where pricing absolutely comes into key. All right, Abbotsford, we got average of $1.262 million, up 1.3% for detached. Listings are up 9.7, 36 days to sell right now, which is up 63 over last year. Things are definitely selling faster last year. Townhouses are still showing some positive growth, but the inventory has spiked quite a bit with over 55.7% increase. So you will see those days on market continue to go up. And condos are actually down. They've taken a bit of a hit in the market out there. You can see there's 385 listings on the market in June and 36 days to sell a property. Mission's market is just over $1 million for a condo right now, 1.03, 1.89% increase. Inventory is up 14.1%. Days on market, it's taken 43 days to sell a home. Townhouses are up in inventory, but down in price. So we see that there's a bit of pressure. Now, I always say, and I always mention this, especially if you're a first-time listener, condos and townhouses in Mission, they're a little bit harder to kind of judge because you can see the inventory at only 42 and 48. We got old product, we got new, depends on what has sold at that time. So just keep some grain of salt with this. You really have to dive into is it an older product? What is older product doing? Is it a newer product? What is the newer product doing? Is it a 1-bedroom, 2-bedroom, 3-bedroom, what have you? But we can see there down in townhouses, up on the condos, inventory overall is up. All right, Langley. Langley is one of the markets we're going to show what's going on in the total of Langley. And then we're going to dive into one of those micro markets to show you the difference here. Now, as it sits right now, the detached properties in Langley overall are down 2.3%. So just still under 1.6 million. 806 listings, total is up 16%, taking longer sell. Townhouses are down 3%. So Langley's taken the bigger hit than some of the other areas right now. And 2.4% down in condos, inventory up across the board, days on market. But as we kind of go into Langley City, so we kind of take out and really focus on Langley City area, we got a lot of development happening, a lot of investors are buying there. We can actually see a reverse effect on the detached homes. They're actually up very slightly over last year. So detached homes in the city of Langley are faring a little better. The inventory is up quite a bit though, comparative to the market, and the days on market, it is starting to take longer. So maybe we'll see some pressure on the Langley City detached market. On the townhouses, the overall market in Langley is down 3%, but the city of Langley townhouses are outpacing that. They're actually doing better at 6%. You can see that the inventory is up 55%. Days on market are going up, still under a month to sell a townhouse. And then condos actually have taken a bigger hit than the average in the city. So the city of Langley is actually the one dragging some of that down because there's been a huge flood in inventory. 182 listings is up 11%, taking longer to sell. It's actually less than the average, though, in the market in Langley overall. But you can see here they have taken that hit of 4.6%. So this is what I was talking about. We always talk about really diving into the micro markets, really looking at what's going on. If we look at Langley as a whole, Langley is a big area. Langley City is just one aspect of it. You've got Willoughby, you've got Willowbrook, you've got close to the mall, you've got Brookswood. Like there's so many different areas, all of them operating differently. So this is why we wanted to really do this microscopic look at what's happening in these different markets. And again, this does change as well. It changes based on ages of homes. It changes on the amenities in a home, how many bedrooms, bathrooms, everything like that. But this gives you kind of that overview overall. Maple Ridge, we're going to do it as well. Down pretty heavy at 9.8% on the detached homes at 1.2%. Inventory up, days on market's up. Townhouses take a bit of a hit, but condos are actually up. So we decided to look at a couple different markets because we sold a lot in Maple Ridge over the years. First, we look at Cottonwood. We got a lot of people buying detached further out that way. We've got a hot deal that's kind of in just on the border of Cottonwood that we're going to show you guys later so you can kind of see the stats here. So we can see the Cottonwood area is actually faring at a higher value than Maple Ridge as a whole, and yet they've still taken a bigger, almost as big a hit in the area. But the inventory in Cottonwood is down, right? So there's less properties on the market in that area. Townhouses are up, whereas Maple Ridge as a whole is down. Days on market is just slightly under the average, and inventory up slightly. And then there's no condos in the Cottonwood area. So we decided to pull in East Central so we can get some condos. You look at the difference here. So this is Cottonwood again. So it's down 9.6. The Maple Ridge average is down 9.8. But if we look at Maple Ridge East, it's down 17.6% over last year. So this specific area of Maple Ridge has taken a heavier hit. Same with the townhouses, down 11.3%. And then condos are actually up slightly in the area. And the inventory is down over on that side of the map. So this kind of gives you the idea between different submarkets, a lot of change can happen. So as investors, we need to understand this data to make smart, sophisticated offers. Surrey is down across the board, but it's pretty stable over last year. Surrey is also a very large area. And you probably hear a lot in the news, and a lot of real estate agents on social media are talking about Surrey Central or Wally. And when I show the stats of Wally, it's going to kind of blow your mind, especially in the condos. Condos are only down 3.1% in the overall. We look at Wally, they're down 18.7%. So they have taken an absolute bloodbath out there in the condo market. And we're definitely feeling it. We've got a lot of clients right now trying to sell in the Surrey Central area, and we can't move the product. All we can do is say, okay, let's readjust the price. It's a race to the bottom in that market. You can see the same thing with townhouses. Detached, hasn't been hit as hard in that area. Inventory up, down, up, days on market really high, especially in the condo market out in Wally. So, some really good opportunities in Wally for the sophisticated buyers. Like, it's down 18.7%. There's some really hurting sellers right now in that market. So you can really take advantage and put some offers in, throw some stink bids, and try to see what you can get. We've got a couple, 2 deals, hot deals we're going to show you guys in Wally, in Central Surrey, that are pretty good, and they actually cash flow. So, all right, and then we threw in Coquitlam. Had some requests for the Tri-Cities, so we thought we'd put the biggest of the Tri-Cities in there. And right now, detached is down 8.5%. Inventory is up, days on market's up, townhouses are pretty fair, condos down just very slightly, inventory up across the board. So that really gives you that idea on why we talk about it very heavily, that you need to make sure you really dial in with your agent on those micro markets, what's going on in that area you're looking at, run your numbers to make sure that you cash flow, or whatever your strategy is that you make money, and at the same time, how can you get a good deal and take advantage of where things are at with the market. So that is all I have to say there. Again, if you guys are watching online, feel free to take pictures of your screens, take screenshots. If you guys are here, take some photos, post them, tag at Kelly Fry Team. We'd love to hear what you guys' ahas are. And we're going to get right into our final speaker of the night, which is going to be Keaton Bessey. So for those who don't know Keaton is a managing broker of Greater Vancouver Tenant and Property Management Services. He's been experienced managing $1 billion portfolio across BC and currently manages over $330 million in assets, $430K in rent roll. That's monthly.
$540 now.
$540. Okay, so a little drop. Some people sold some houses.
No, $540 now.
Oh, $540. Sorry, flipping it. All right,
Yeah,
so another
yeah.
$100,000. With a 99.9% rent collection rate. So that's pretty high. So you're basically not really having too many defaults then at that point. Property management and real estate was in his family since his existence. It was a concept, and he strongly believes in rent control created the housing crisis, which we couldn't agree with more here. So Keaton, we welcome you. I'm going to pass this over to you and turn it over to what's going on in the rental market. So
thanks, Cam. Thanks, everyone. Let's get in here. So that's my company there. Greater Vancouver Tenant and Property Management. Like Cam said, I'm the managing broker and owner there. A little bit about the company. We provide third-party residential rental real estate services throughout Greater Vancouver. We take care of condos, townhouses, duplexes, detached, all the single dwelling stuff for the most part. We've rented over 500 homes since we started the company 7 years ago, over $400 million now in assessed value. Renting about 120 homes a year right now, so every 2.9 days of the calendar year. We've collected over $20 million in rent at a rate of 99.9%. Our monthly rent roll is $540. Like I said, they're at 216 doors under active management. We got a team of 740 Google reviews at 4.6 stars, and we do not hold a trading license, which means we cannot buy or sell property, which means we only do property management. Disclaimer, anything that I say today is not legal advice, not professional services or anything, unless you sign an agreement with us. I'm not here asking for any of you to sign an agreement with us. I'm just letting you know, because if you do anything that I tell you today, it's at your own risk. Don't call me complaining about it. What I will talk about today, we got a rental market update, finding great tenants today, a bit about our services and how we can help, and then just questions and stuff, right? So, market update. On the screen here, I've tracked the rentals.ca rental reports back to 2021. Rentals.ca is probably the report that pops up most often in the media. It comes out every month. CMHC's report is once a year, so it's always lagging, and it's not very good anyways, from their own mouths when I've talked to them about it. Rentals.ca is good. It's in the media. However, it is asking rents. So it is not actual rents. Nobody has that data except for private companies that own those properties. These are trends. So these are all going to be year over year numbers as the rents are changing here. And then you can see some stuff so we got in line. So in last June is finished, of course, we're in July. So rents dropped 5.9%. Again, asking rents have dropped 5.9% in June over the last June, which was down 7.5%. And then before up 18, up 19, up 3.5. And we've color coded this stuff so you can see the green numbers are really, really high increases. Obviously, we're speaking from an investor's perspective here. We want the rents to go up. And then yellow is, kind of on the way down, and red is in really bad territory here. So you can clearly see September 2023 was the peak of rents. In September 23, you just throw keys out on the street and someone will pay you $5,000 a month. Doesn't matter which door they open. It was absolutely insane. And now we're begging and pleading for people to show up to showings. What I got on here? So asking rents are down for 4 reasons, just in my opinion, is what we're seeing. So we've got high inventory. Just Cam was talking about high inventory, and we got high inventory in rentals as well. We have new condo completions, still lots of shovels in the ground, cranes in the sky, people completing and not completing, according to Stu with his last presentation. We have lots of new purpose-built rentals coming to completion as well. So there's lots of stuff being built, and there's lots of stuff completing and trying to be occupied. And we've got lots of existing for sale, which then turn into for rent. Lots of our conversations lately are, I tried to sell my property, couldn't sell it, I'm going to put it on rent. What a lot of doomers think is these people are really stretched and they're just trying to get anything going. A lot of these people say they can't sell, have significant equity in the property. If they rent it, it will cash flow. They just don't want to let it go for the amount of money the market is going to give them today. Affordability. Many are moving to co-housing arrangements or just straight out of the province altogether. BC had a net negative migration in the last something period. I think it was a quarter. So people are leaving the province altogether, and we don't have a lot of people coming to the province. And people are, if they can't afford it, more and more into roommate scenarios where it's 2 separate households moving in together, basement suites, all those kind of things. Immigration, very few high-earning immigrant applications. I'll show you later on our immigration applications at previous time were double, maybe triple what they are today. And today they've been the same for a very long time. What we're getting immigrant applications, a lot of these people are on work permits on their 2nd or 3rd renewal, and they're already making a lot of money. Any new immigrants that are coming in are not these high-earning, sponsored visa 3-year things making $200K and stock bonuses from Microsoft, Amazon, film companies, all that kind of stuff. We're not seeing that at all anymore. It's a lot of locals or people who've already been here for 2 or 3 years. And slow sales. The musical chairs is slowing down. When you're doing 6,000 sales in the Vancouver board alone every month, lots of people are moving. And if there's no inventory, everybody's moving all the time. Now there's only 2. So less people are moving around. These are some updates from our specific portfolio. See, there's units that we have turned over more than once, and we can kind of speak to a couple of them here. So we got Albert Street in Burnaby, 2-bed and den townhouse, 21 years old. In June 2021, we got rid of it for $26.95. We just rented it again in June 2025 for $3,000. You might look at that and think, I thought we had really big increases in 2023 or 2022 and 23. We did. We've had significant decreases since then. So we're still up 4 years ago. It only took 13 days to rent it out. It is a townhouse in Brentwood. It's a good area. We did have good interest on it. But if it's underpriced, people generally will overbid as well. Didn't see any of that. This one dragged out a little bit once we got documents in place. It was not crazy flying off the shelf either. So clients kind of got lucky to get it rented that quickly. Nootka Way, Port Moody, 2-bed, 17 years old, April 2024, $29.95, July 2025, $24.95. So we just got away with something in April. This one was on the market for almost 50 days this summer, and we barely got rid of it for $500 less than we did last year. Not awesome. In Surrey, I just posted on Twitter 2 days ago. I was trying to price out a 1-bedroom in Surrey, and I was trying to see how many units were on the market. Usually it's a couple flicks of the wrist, and then, okay, 40, 50, whatever. I couldn't get to the bottom, so I made a game out of it, went all the way to the bottom, let it load, and then went all the way to the top and recorded it. It's a very long list. It was also filtered. So this one in Den, 4 years old in Surrey, September 2021, 1700, September 2022, 1850, July 2025, 1940. So like, what the hell are you talking about? Honestly, we don't know sometimes when you can get this specific on things, right? This just went very recently for almost $2,000. We have rented other units in Surrey Central for $2,000 and more, like last year. So this one got quite close. It's a one in Den. It's relatively new. It was on the market for 47 days. This one was not an overbid, but we've had a couple overbids on properties lately as well, just because of the way our process is set up. We've had overbids on properties when they're the only applicant. And they check out really well. So it's quite funny. Just, it's all perception, right? Dunbar and Kitsilano here. We've got 113-year-old upper half of a detached home. So June 2021, 4775, May 25, 5270, 84 days on market. Barely scraped that one out. And then Alberni Street. This is that Kangokuma building. 1 bed, 2 years old, December 2023, $3,200. And June 2025, also $3,200. 13 days on market. This one was rented occupied as well. All right. So finding great tenants today. Things have changed. Again, you can't just rent to anybody and they'll overpay for it and all that kind of stuff. You really got to pay attention here. We got a tweet in the top corner there. You need to think about the 3 of the following things if you're going to be successful leasing 1 or 1,000 units in today's market. 1, reasonable rents. We're getting lots of lowball offers today as well. Incentives, you want to help people feel there is space to negotiate and they'll come visit you. So incentives are not about negotiating. Everyone thinks you're like walking onto the used car lot and negotiating with someone right away. That's not how the marketing platforms work in Greater Vancouver, and that's not how you rent properties. What you want to do is give somebody a reason to come apply. Try to get the application in their hands, try to get them to do something so they have an ability to try to negotiate something, and then that's where you start getting more information. You let them apply, you get their income, all that kind of stuff, and then you have a way better position, and that's how we kind of work these things out. And work, follow-ups, customer service, management of the prospect and deal flow. You need them, they don't need you today. They have a lot of options. We have people that we are calling 2-3 times a week. They have a lease sitting there in draft. Yeah, I'll get to it tomorrow. Like, we're almost falling off our chairs thinking about a year and a half ago. Like, what do you mean you'll get to it tomorrow? You've already had it for 5 days. They know, they don't care. They have options, right? And they may be playing us a little bit, but we'll see. So I got a list of best practices here. I've been preaching this stuff for a long time, but here it goes. You don't need to pre-screen. Open up days in your calendar, book with name, email, and phone number. We have done thousands and thousands and thousands and thousands of showings. Most of our staff are like young women. This is all we need. Got to remember, people don't want to waste their time either. And if you can get one person on one day, you can get multiple. So you're going there anyways. Don't worry about people not showing up. Don't ask too many questions because you risk turning away an otherwise good and interested tenant. If somebody's got good money, good credit, you want them to live in your place, and you ask them a stupid question about their dog or how long they've worked for their employer before they even come see the property, like, get lost. Invite them in, show them around, answer those questions with the application. Ensure they feel comfortable, answer their questions, get an application in their hand. Follow up 2 to 3 days after. People are not making snap decisions today. You may have to continue talking to them. So keep bugging them. Don't wait for them to come to you. We don't have, something that's super valuable today. Do not loosen your screening criteria. In slower markets, there is more fraud. It's way easier for me today, if I wanted to go out and rip off a bunch of landlords than it is when it's super busy, because I can't even get in for a showing. Now I'll get you to drive all the way from Chilliwack to Kitsilano to show me a place, and then I'll still rip you off if that's what we were doing. People will get away with that. If tenants apply for 6 to 8 weeks away, like, I don't really want to wait that long to close up this deal, just ask them. And a lot of them are coming up to like mid-month or even a full month. Try to get, try to negotiate with them a little bit there. But we are seeing a lot of the time if they're applying. So today's what, the 17th? They're applying for September today, and most of them don't care. September or walk, right? You can probably bring them up a couple weeks, give them a bit of time to move their property, that kind of thing. And remember, if your property is vacant, there's an insurance problem as well. So even if you can get someone in there for free, just get them in there. Rent is always negotiable. Just live in that world. We have a lot of people who have come to us and we've told them, like, we're sending them an offer. And they said, well, this offer isn't asking rent. Why are you even sending me this? It's like, because we have their information and we want them in the room when I'm trying to give you this information, right? So we always tell people, when people will come into the showings, we say rent is always negotiable. You can put it on the application, how much you're willing to pay for this property. That's also how we get the up bids, even in a slow market, which is very interesting. It's also good market information. If you've got 5, 6 people coming in, everybody's lowballing, it's overpriced. It just is. Pet friendly. I cannot stress this enough. 1 pet up to 35 pounds. The biggest thing I can say about this is a pet friendly apartment gives you access to 93% of prospective tenants. Without it, only 65%. So in today's market, especially where you're trying to get as much rent as possible, you want to offer a pet friendly apartment, 1 pet up to 35 pounds. The marketing platforms that everybody uses today, when you hit the pet friendly button, it's either on or off. It's not 2 pets and it better be trained and it better be neutered, all that crap. It's just on or off. So you want to be on, people can apply, and then you can screen out the pets that you don't want. It is still up to the landlord to say, you know what? I don't want any pets. You can just make up no reason at all. I just don't feel good today. No pets. You can do that if you want later. Some other stuff about the market here. The oldest and least desirable properties are getting hit the hardest. If you got new or near new properties, they're still renting pretty well and for good amounts of money. If you're spreadsheeting it out, it's still not, great. If you're running a mortgage and all that kind of stuff, but those are at least holding their market rents. And trying for more, when the market was really busy, probably have 9 out of 10 clients always want to try for higher than we told them it would rent for. That could work sometimes. You get lucky. Probably 5% of the time it would happen. Today, you don't try for more, but again, our process allows for overbids. So, and then just market the property properly. So clean, in good repair, professionally photographed, empty, no furniture. If you're living there still, you're trying to rent it, okay, like photograph with the furniture in it. If you move out and it's still marketing it, take photos without it. You want to get photos when there's no furniture in the property, so it helps you re-rent it on your next turnover, because then you have photos for when the tenant's still there. And occupied ideally, but it doesn't have to be. We've been renting properties occupied as well. Some other things. So an anecdote on immigration here. So before November 2023, 20% of over 1,000 applications in our system were from a prospect here on a work permit. Keep in mind, we have it very front and center on our application and showing process that we require very high take-home income requirements. So this number is probably lower for us than it would be for maybe other companies that don't have as high income requirements. Since then, it's 9%. So less than half. I checked today, numbers the same. It's very, very consistently 10% now, so half. Our days on market here. So for leases signed in the last 60 days, they've been on the market for 41 days. 90 days back, it's 50 days. So the market is starting to pick up a little bit. We are seeing a little bit of a lift, and I'm not getting too excited about it based on everything else that I'm seeing and hearing. But on our side, we're seeing a bit of a bump, which is great. Might just be a little summer bump. It's nice out, but we'll see. And then our year-long days on market is 46. The highest it's ever been is 50, and actually it just ticked up to 50 like this the other day. So it's still, that's the highest I've seen it. Tenants are still moving in on average 13 days after the lease is signed. So we are getting a lot of tenants that are saying, hey, I'll move in, the next month. I got to give my last notice, but we're able to negotiate that back and get down to 13 days. Applications with a work permit, like I said, have dropped by over 50%. And the average, this is shocking, the average number of leads per property for us right now is 29. In 2022 and 23, this is well over 200. And at one point we had one property, because our system's automated, like receiving leads. We had one property with over 1,000 people that inquired for a showing before we just turned it off. A bit about our services. For every new client, we charge a one-time engagement fee of $500. We're not going to let your super high price expectations drag down the rest of our clients and their services for them. So you pay us a little bit in advance. If you want full service management, it's 10%. There's no leasing fee. It's just the $500 and then 10% as we go. If we're leasing the property out for you, it's another $1,500 on top. So it's a flat fee. 500 plus 15 is $2,000. Leasing by owner, this is one that people really like. It's our highest margin product and also our cheapest one. So everybody's happy. We do everything for you except for the actual showings. This works a lot for owners who still live in the property and are moving out of it soon, so they're there. We walk them through the training. It takes about 15 minutes. We give them a scheduling app on their phone. We just fill it up. They don't have to do anything other than that and show it around, and that's it. And saves $500 because we don't have to send anybody there for the showings. But we still do all the screening, all the photos, all the marketing, all the prospect, all the scheduling of the showings, all the follow-ups, lease, move-in inspection, everything else. You're just physically doing the showings. So, and again, we don't have a trading license. So if you know a good realtor, let us know. There you go. And that's me.
All right. Does anyone have any questions right now about the rental market? And again, if you guys are online, feel free to drop the comments in the chat. I figure this is a very timely one because I know a few people right now trying to lease, and they're all complaining right now that they're not getting any action on it. So I felt this was very timely for where the market's at to get a property manager who's very tuned in with the market to really kind of dive into these numbers and understand what's happening. So something that just came up here recently, I saw it on TikTok, and I was going to ask Stuart before, but with the two of you guys here, is when a tenant's leaving, a lot of landlords I don't think are aware that we now have to pay interest on the deposits. So maybe you can touch on that as well, because I saw that on TikTok, and it is the poor girl's thing is blowing up, and I'm like, this is an interesting topic because I think a lot of landlords are not aware of this now. Yeah,
I mean, when people first see the numbers, they freak out because they don't understand what it means. You do have to pay a deposit. Or sorry, interest on your deposit. I don't think even a lot of tenants really even know that. It's built into our process, of course. You just go on the BC government website. They have a little calculator. It's not super user-friendly, but it at the end of the day works, and it punches out a number, and it breaks down the interest charged on the deposit amount per year. I think the most interest we've had to pay out is like $125.
Yeah, it's not crazy, but
no,
it's still something to be aware of. So
yes, definitely has to be done.
Yeah, and I believe, if I remember correctly, that it's always been there, but from 2009 to about 2020, it's based on the prime rate. Because the prime rate was so low, the interest was actually zero. So that's why a lot of people, especially if they've been landlords in those recent years, they wouldn't know about it because it was zero. Yeah. Now suddenly in 2022, as we saw interest rates rise, now the interest has come back, and then so now landlords just have to be aware of it, because what I saw on the TikTok is that the tenant is going after her landlord for that $100-something that are owed to the RTB. So for $100-something, it's really just causing you a headache. So just be aware of it when you got the tenant leaving. Just know that that's the system. Further to that point, a bigger headache, kind of add to Stu's presentation before, is when selling a tenanted property. We've heard a lot where the lawyer or the realtor or the landlord will forget to pass along the deposit in the closing. And even when they do, sometimes there's no condition inspection report. So the deposit is worthless. So just checking those two things when selling a tenant or when buying a tenanted property for sure is a big important one. So yeah, absolutely. Yes, question. I will just repeat the question since we both have the mics up here.
Question, but it's a point that I just learned. You have to do an inspection after 15 days, within 15 days. Otherwise, they can charge you the double deposit back. I got caught on that.
You mean at the beginning of the tenancy?
No, at the end when they're moving out.
Yeah.
Do an inspection within 15 days.
Yeah.
You need to give the deposit.
You give the deposit back.
You don't have to give the deposit back, but you have to actually schedule an inspection then within the 15 days. If you don't schedule that inspection, you have to give double the deposit back.
Sure.
I
I
lost on
think
that.
you're mixing the two things, because we need to give the deposit. Yeah.
I mean, it probably applies in the same way. If you don't have the inspection as well, you need to. It's 15 days. You have to return the deposit within 15 days of the tenancy ending, or the move out inspection happening, where they give the So if they moved out and then it was 15 days and you didn't try to do an inspection, they're going to say, "Well, give them the deposit back and double." Yeah.
They had left a lot of stuff there.
Yeah.
So I said, I'll give you the deposit once you move your stuff out.
Yeah.
That didn't work.
Yeah, you don't have
Tendency,
the deposit is not yours. Time starts and they have to agree on the holdbacks as well. Like
Yes.
people don't get that. Like the security deposit part of managing our business is just a massive time suck, and like we're just constantly making sure we're on top of it. It's not, because the tenants don't always really understand how that works either. But they just want to get it over with. So we're pretty good at maintaining most of the deposit, but some of the owners also just say, you know what, it's okay. But we're also going for the most amount we can, and then they're negotiating back to about what the landlord's out anyways. So it's a matter of, process and everything. Yeah, it is kind of worthless, I guess.
It was for me.
It's a bit worthless.
Believe me, the deposit
Yeah.
didn't cost.
The deposit's better
They
knowing
didn't
that.
cover close to what they left, the stuff they left
Yeah.
behind.
The deposit's better for, especially if you're collecting in certified funds. It's better as a kind of a confirmation that the tenant has some sort of financial ability. So you're doing their income check, you're doing their credit, you're doing all the references, and then they can give you, $2,000 in an email money transfer. It means it's in their bank account. So okay, good. It's the last bit of like good feel that this is going to be okay.
Oh, no, I think you still collect the deposit. but-
Yeah, collect it anyways, right? Yeah. Don't not collect it.
Just be real careful with it.
So I just pulled up the RTV's website on that specific section just to read it out. And, I think what happened with yours is typically the forwarding address for the tenant is on that move out inspection, if that's correct, right?
Yeah.
So it says that you have 15 days to return that deposit upon receiving the forwarding address, which would have been on that move out inspection. So I'll read it right verbatim here. Tenant provides forwarding address. When the tenancy ends, the tenant must give the landlord their forwarding address in writing where the deposit will be sent. This usually happens just before or right after the tenant moves out, but the tenant can provide a forwarding address within 1 year of the tenancy ends. Once the landlord has received the tenant's forwarding address, they have 15 days to return the deposit with any interest to the tenant if there are no issues. The landlords can't charge tenants a fee for returning the deposit for ways that include electronic, by person, mail, blah, blah, blah. If the landlord doesn't respond within 15 days, if the landlord doesn't take any action within 15-day timeline, the tenant can make a direct application request requesting the landlord return the deposit. The landlord may be ordered to pay the tenant double the amount of the deposit, and the tenant can submit a direct request application 20 days after the tenancy has ended, and the tenant gives the landlord their forwarding address. So as long as you do the move out inspection and they've put their address on that
Used to
move
be
out.
30 days, that's why I got-
Oh yeah. Things
Also-
change all the time.
Also, it could have just been, I didn't read his decision, but it could have just been a procedural error, because they're in the court all the time now trying to turn over RTV decisions. We just had one.
Yeah.
Client's out $12,000, but it's complete. Doesn't make any sense at all. Our lawyer's like, we have a tenancy lawyer, and he's like, well, this would be up for judicial review. However, that costs about $12,000 to file for it, so forget about it.
Crazy.
Cool, thanks.
All right. Yes, questions.
I had a question.
Yeah.
I wanted to clarify the immigration part there. Is
Yeah.
that when you mentioned 20%, I think I did not quite understand.
Yeah, so of all of our applications, say about 1,000 applications
Before was 20%.
before November 2023,
Was
right?
20% or immigrant?
20% of it. So like 1 of every 5 applications would be an immigrant application with a work permit, right?
With work permit. Okay,
Now
so
it's
20%
1
of
in 10.
Work permit.
Now
and
it's 1 in
only
10.
9.
Yeah.
Ah.
Yeah, less than 1 in 10.
And these people, they're gonna leave, right? Because they are here temporarily. The work permit
Yeah, it's a whole nother thing, but it's just there's not a lot more coming.
is not a lot.
Yeah, and that's obviously people in seats. If we run out of seats, you can't.
Applications, I was
Yeah.
like, to become immigrant or to apply for the.
Well, that
And
was
also Diwali market like threw me off Diwali, because I have a condo Diwali that the owner wanted to sell.
Mhm.
And I rented it really well, but in between tenancies, he said he wanted to sell, and now he's coming back paying rent it because
Mhm.
not moving.
Mhm.
Yeah.
So the prices, both of you touched down and how bad that market is. It's beautiful. It's close, so close to the hospital.
Yeah, and there's tons of places to live. Go buy one.
Yeah.
I'm only one.
Yeah.
All right. Any other last questions? We'll wrap it up there on that segment. No? All righty. Appreciate it. Thanks so much. I'm going to grab
Thanks, Cameron.
that. So when you're chatting
you're right.
the side there. Thank you. All right. And we're going to go into our final segment here, which is our hot deals. Now, I kind of teased it at the beginning, but we haven't seen this many hot deals on the stage in a long time. So that is definitely telling of the market. And we talked about it a couple months ago when I said, oh my God, cash flow is back. Now, cash flow, if you're self-managing, sorry, property managers in the room, this is definitely where you're going to maximize your cash flow in right now in the market. However, it is worth too having a property manager and taking a little bit less and a little bit of a negative as well if you don't want to handle that headache or have someone who finds you a good tenant. Getting a bad tenant, we had the segment of Tales from the Trenches for a long time. That definitely should scare you in making sure you do everything right according to RTV. All right, first one. This one's an off-market deal. So I've got two that are off-market for you guys today. So these are great opportunities where you can get in before anyone else. Now, I'm in discussions with the seller to possibly put this on the market. So this one might get on the market soon. So this is your opportunity to get in advance of it. Now, there are two dwellings on this property. This is in Maple Ridge on 229th Street. The main house currently is a 4-bedroom, 1-bath house. It's about 2,037 square feet. It was built in 1910. So it is an oldie but a goodie. The roof is approximately 7 years on it, and it's had some additions over the years. So you can kind of see this whole part over here was an addition. He doesn't know when that was done. It was done sometime in the last 100 and something years that this property's been around. And because of the age, there was asbestos. He's had it tested and had it fully abated. So he spent between $50,000 to $60,000 already getting that taken care of. So you don't have to do the roof. You don't have to deal with asbestos. You can get in, start renovating right away. The bonus of this property, though, is it does have this garden suite. And he's now fully renovated the garden suite. It looks quite cute. You can see kind of the staging, the part where he's in. He's still doing countertops, everything like that. It was a very large garden suite, very wide open. He's rejigged it now to be a 2-bedroom garden suite. It's about 476 square feet. So a little tight in the living areas, but still a very livable area. And it's fully renovated. The reason why he decided to renovate that one was because of buyer's financing. You have to have a livable dwelling in it to get the financing. So the lenders that we had on previous deals, they wouldn't accept it because there wasn't at least one livable dwelling on it. And the people who were buying it were not, they were looking to renovate it and rent it versus just a contractor had cash. So he was going traditional financing. So now he's done that. So anyone going traditional financing will be able to likely get financing on this. The property is just under 9,000 square feet. Now, I think this is a great deal for anyone who's looking to lock down a great property to hold long term. So I'm running this as a BRRRR strategy, BRRRR. So buy, renovate, rent, refinance, and then eventually repeat. So here's how the numbers break down. So he's asking $1,025,000 for this, especially now that he's done all the work of the garden suite and the asbestos abatement. Purchase costs are looking at around $21,000 for your PTT legal. Maybe you get an inspector in there. Maybe you save that money because what is he going to say? It's rough condition. You can kind of see the photos here. Like the flooring is all swelling. Like everything's pretty rough shape there, especially after they did the asbestos abatement. They ripped out all the ceiling in there. So it's just exposed. The cool thing though, that when I was there, is that because they ripped out all the ceiling, they realized they've got just under a foot of extra space that they can raise this up so they can actually create a bigger living space because for whatever reason, they just had it really, really low. Reno, we're estimating around $200,000. If you're skilled or you know anyone who's super skilled, you can probably do this. He figures he can get it done for between 150 to 175. So I boosted it a lot higher because, got to make sure we cover those bases. So your total loan, we're looking at a cost plus improvement. I was on the phone with Green Mortgage team today, running through the numbers with him. So basically, you'd be looking at a total loan of $980,000 after the reno. Now, of course, for those who aren't aware, cost plus, you still have to have the renovation money up front, and then you'll get that back in draws as you complete the renovation. So that way, at the end, your total loan will be about $980,000, and you'll get about 80% of that $200,000 back. So how it's treated is its purchase price plus the rental cost, and you got a total loan at 80%. Talking to Kyle, he said you can probably get it for under 4.5. So we decided to go higher on the interest rate just in case. 30 years, the monthly payments come out to about $5,168, and the total cost to close then is $245,000 at the end once you get all your draws back. Monthly holding costs when you're doing the reno, so you get your mortgage, tax, insurance, probably some hydro, but you can right away rent that suite. He's had a couple of property managers out to quote him for it, and they are saying 22 to 23. So I put it at 21 because we all know the way the market's moving. Take that quote, knock it off, and if you get better, great. So your total monthly expense on this is going to be about $4,000 while you do the reno, and it's probably going to take, depending on how quick you can go, budget for about 6 months. Now, when you go to refinance, the after repair value we're estimating at around $1.3 million. With 1.3 million, I've seen some going as high as 1.35 to 1.4. Again, being super conservative on our numbers. You'll be able to take a new loan out at about $1,040,000, pay out your previous mortgage less whatever minor pay down you've gotten over the time. You're going to have a payout penalty of about 3% interest, and then you're going to have some more legal fees. Your refi cash out, you're going to be able to put about $54,000 back in your pocket right away. So this isn't like one of those slam dunk deals where you pull all your money out right away, but we haven't seen those deals since like 2018, right? So let's be realistic. This is to help get you into a property in the market undervalued, increase the value, pull some money out that you can reinvest right away. Once it's now fully leased up, the gross rent is about $59.50 approximately. Taxes, insurance, you got your new mortgage, which actually goes down because we figure the interest rate should go down when you're off the cost plus. Cash flow is about $182. But here's the kicker, is your return on your investment. So total cash needed was $266,200 when you're all in and done, but you've got your money back. You refinance, pull that money. You have about $211 left in this deal right away within the first 6 months. Then after a year, here's what your returns look like. You got cash on cash, pretty small, standard of our market. You got your equity, 3% appreciation, but of course you force that value up. That's where you're making your big return on investment, and the total return is about 64.08%. So again, some opportunities are starting to arise in these BRRRR strategy methods, so you can start locking down properties and start building up your passive portfolio through these types of rental properties by adding value. So that's deal number one. Again, off market. If anyone is interested, let me know right away. He is thinking about putting it on the market pretty soon. Next one here, this one is on the market. It's in Kelly's favorite complex in Chilliwack. I think she sold all of the properties at least twice in there to investors. This is a 4-bedroom, 1-bath unit. It's got air conditioning. It's been fully renovated. Beautiful kitchen, beautiful bathroom, fully redone. New roof paid by the seller from the strata. It's 1,310 square feet, built in 1978. Here's how that you can see it's quite nice inside. Owner occupied, so you'll be able to get market rent right away. Listing price is $487,000. We estimated the gross rent at just under $2,700. When we were looking at several online sources, we were finding a little higher, closer to $2,800 to $3,000 in some cases. But again, we want to be super conservative out there. You've got property taxes, insurance, strata fees, mortgage, total cash flow on this self-managed about $150 a month. So again, nice to see cash flow coming back into our market. This is also the cheapest townhouse with 4 bedrooms on the market that I could find. Purchase costs, so you've got your down payment, transfer tax, legal inspection, appraisal. You're about $117,000 invested into this. We assumed a 4.4% interest rate on the mortgage, 30-year AM, 80% LTV on this property, and your total ROI is about 21.24%. So that one's on the market now. If anyone's interested, let us know. We can definitely go take a look at it and check it out. All right, this is, there's an error on this listing, which I thought we had fixed, but this is supposed to be a 1-bedroom, 1-bath, 400 and something square feet. This is in the Gallia. This is in Wally. So this is one of those opportunities where someone is really desperate to sell and you can get a really good buy right now. It's completing any minute now. Like I was just on site yesterday and they are expecting occupancy at the end of the month. And probably the completion is going to be like right at the beginning of August, they're anticipating. So if someone wants this deal, you got to move fast. Oh, what is going on? Why is this repeating Now, this is the wrong photos down there. Ay, hard to find good help these days. All right, but this is the correct listing price. So it's now $379,900 plus GST. They just recently did a reduction yesterday. So really, it's giveaway price. This price, the owner is going to be injecting cash for you to buy it. They're literally putting money up saying, take my property from us, losing the entire deposit. So their loss is your gain as an investor. Rent potential around $2,000 a month. Expenses are $83 for property taxes monthly, $75 for insurance approximately, association fee, mortgage on this thing. Total cash flow is just under $100 a month. We actually have another unit that's larger than this one. Kelly, what's the price on that one? $425. So this one's 499 square feet. That one's 583. So a larger one bedroom at 425. Also, that seller is injecting cash to sell. So we got two of these available right now. This is your total expenses to purchase this property, $114,000 invested. Same assumptions at 4.4%, 30-year AM.
Very close to Surrey Memorial Hospital.
Yeah, walking distance.
Walking distance, and UBC has bought a 5-acre parcel nearby. There's going to be 10,000 students going to that's their projection. And there's also a second medical school for SFU that's being built. So there's like major things happening in the area. And the reason, especially like occupational therapy, physical therapy, all of that, they want it to be tied to the hospital, the universities. So that's why the area is in such great demand. It's just that there's a bit of a surplus supply right now, which is causing this price pressure. And people that bought over 2 years ago, that circumstances have changed and cannot complete. So
there we go. All right, and our second one then is the Flamingo. This is also in the Surrey Central area. Now, this one is an off-market deal. This one's also closing really quickly, within weeks here. Now, this is a studio, 1 bath, 320 square feet, give or take. We didn't get the exact floor plan of it.
I didn't think it was that small.
Yeah, the studios online are only showing that big. So, but
It's on the 11th floor.
11th floor unit, completion coming up. However, the big key one here is the financing option. The current owner, if you if they assign it to you, you purchase it, they'll actually be your lender. They just don't want to close and be on the title. They'll be on the title as a lender, and they're willing to do it right now. We negotiated at 2.5% for a 3-year term amortized over 30 years. So really spectacular financing.
But basically, you can buy it either way.
There's more people online that want to hear this probably.
The owner's ready to close with cash right now. He just wants, if it's after closing where he has to pay property transfer tax and GST, the price is $390. But if you take over the assignment, he'll still finance it and you'll get it for minus GST basically.
Minus the second round of GST.
No. If you take over the contract before closing, he'll inject the cash for the mortgage.
Yes.
He'll still carry it.
But the original developer still has to charge GST. So there's still $390 plus GST. It's when he resells, if you were to resell it.
Oh, yeah, but
Yeah.
I'm talking about the price.
Yeah. We're talking about the same thing, but
Yeah,
different direction. So what we're saying about saving the GST there is if he does have to close and you try to buy it from him again, he's doing it at $390 right now plus original GST. You'll save the $18,000 if he has to then increase his price to resell it, and then because it's vacant, the government will charge GST again. You're going to save that $18,000 in this scenario by assuming the contract and then having him be your lender. Here's how the numbers break out. So this is the $390 plus GST to close on the assignment side of it. $1,800 a month in rent, expenses, property tax, insurance, associated mortgage, about $169 because of that incredible interest rate, right? So that's a big win. And you're under $100,000 invested into this deal this time. So if anyone wants a VTB deal, let us know. This is the unit itself that we could find online. Again, we'll find out if there's different studio styles, but that's the only one we could find. Return on this one's about 24.4%. It's a really good opportunity right there. Again, we're starting to see deals. That's the key thing here. So as investors, it's important to really think about what your strategy is, how you want to start building your portfolio, and let's start putting offers in on property, start analyzing them again. I think a lot of investors had kind of sat on the sideline because through 2020, 2021, 2022 even, it was very hard for anything to get under contract because you're competing against the end user buyers. And then when it was finally time to get into the market because they weren't going like crazy, you couldn't cash flow anything because prices were still high, rates were high, nothing made sense. We're now starting to see that market is starting to make sense now. All right, we'll wrap it up. So flip out your phones. You can scan here if you want to follow us on social media. Then, of course, you can, if you want to watch this replay, something that you heard Stuart say, or maybe Keaton was like, I want to re-listen to that one part. You can scan that here, go and subscribe to Cameron Manning on YouTube, and you just go to the live tab. All of our past live streams are there for anyone to rewatch. You can comment any questions you have on there. I do check them quite regularly, or of course you can reach out to us with any questions the speaker had, or reach out to that speaker that was on there. They always put their contact info in the slides. Manning Up on Real Estate podcast is back, and we are basically adding new episodes. We're also taking the excerpts from our Investors Performance Group meetings and putting them onto the podcast as well. So if you can't sit and watch a video, but you wanted to hear something that maybe Keaton said, we're going to be taking that audio, stripping it out, adding it to the podcast as well, so you can listen while you're driving and be able to keep up to date with all the things you need to. And of course, there is the YouTube channel as well for the podcast. Go ahead and subscribe to that one as well. Of course, you can join our Investors Performance Group community on Facebook. We post all the updates on when meetings are going to be happening. We post information you need to know. Sometimes people ask questions that you can help answer. We're just trying to build the community up online, so it's not just once a month. You guys can engage with each other throughout the year. And of course, you guys are all invited to our Brewed for VIPs client appreciation event that's happening at the end of August, August 31st. And it is currently being sponsored by Thunder Clean and yours truly, Keaton Bessey from Greater Vancouver Tenant and Property Management. So we would love to have you guys out. Basically, it's just a fun day where we just basically rent out the entire brew pub, and you have food, drinks, good times, and just a lot of fun. So RSVP is available right now, and we hope to see you there. I think someone's got their phone out. No, we're good. All right. And then, of course, our next meeting is going to be August 21st. So spread the news. If you guys are live watching online, we'd love to see you in the crowd. But of course, you know, we do have the live stream option available. But tell your friends, invite some friends out. We've got some interesting speakers we're trying to line up for August as well. And that's it for us today. We are ending a little early, which is nice. So thank you guys so much for coming out live. And of course, you guys who are online, thank you so much for joining us as well. Feel free to like, comment, and subscribe on the video. And of course, we'll see you guys in August so we can cut the live.